Hey everybody, it's Pete Carmasino here at Chaikin Analytics. This is the halftime show on Stockcharts TV. And each and every week we kind of go over what's happening here in the markets, and there's plenty to talk about, obviously. If you're paying attention just a little bit, you know that a lot of semiconductors and tech names have really taken it on the chin. Now, last week I did a video and talked about Apple and Tesla kind of falling behind, and you're continuing to see that now. It didn't happen right away. And that's not what these videos are for. These are not day trading videos. These are long-term trends that are kind of either materializing or showing up or giving us indications that things are changing. And that doesn't mean they can't change back. However, in the short term, we are seeing a pullback. Now, we talked about inflation being in the driver's seat. That's exactly what's happening. And that's really sort of trickling into the interest rate and bond market. And obviously, you know, what we're hearing in morning headlines, either from central banks or even from, you know, earnings, things of that nature, we're getting that seesaw type market. So back and forth, the push and pull of either rates higher for longer or, you know, the Fed saying they expect to keep shrinking their balance sheet. There's a lot going on. They're reiterating patience at the Fed. And I don't think they are lying to us. Right? So, you know, I've always said, you know, I've been saying this for now, maybe going on a year, if not more, that I'm watching the unemployment rate for any signs of a rate cut. Now, what creates a higher unemployment? And that could be, you know, manufacturing index, like, you know, you're talking about the producer or PMI, the ISM manufacturing PMI, things of that nature. You start to see that decline. It's trading at around, or last reported at around 49 or so. Anything below 46, 45, I think starts to get a little squirrely. And that's potentially where you see unemployment rise. I don't really know. I mean, no one really knows, right? The point is that we're in an election year. I think the Fed's being painted into a corner. They don't want to look like they're acting in any political basis, but at the same time, they kind of have to keep their mandate going. And right now, that's what they're doing, right? Inflation is slowly coming down, but we're seeing sprouts of higher prices along the way. That happens. Okay, so where we're standing and where I'm standing is I'm watching the bond market sell off. I'm watching rates move higher, and I'm watching the unemployment rate and how that's going to be affected somewhere down the road, if at all. And if it does happen, it may happen soon, and that could get the Fed off the bench, so to speak, start to move a little bit on rates and not look too political because it's a presidential election year. But who knows? All right, so let's look at some things we typically look at. I'm going to look at bullish percent because I do follow bullish percent. And we're going to look at how that rolled over after we talked about it last week. Still probably has room to go. Again, that's unpredictable. But at the same time, we've got a big number of earning, you know, coming out tonight from NVIDIA. The earnings number everyone's kind of waiting for. Options that are positioning in that trade right now are implying about a 10 to 11% share swing. That's up or down. It's really a high earnings bar that they are looking at. Obviously, this is important as always. This is really the leader of AI and what's happening out there in the market. Now you're seeing other names come in. You know, look at SMCI. That's a stock that was sort of in a bubble phase, rolled over. You're seeing names like Palo Alto in cybersecurity space, rolling over, dragging that small sector down of cybersecurity stocks. So I always said earnings are like fighting the invisible man. If you wanted to get into the ring, no matter how good of a boxer you are, if you can't see your opponent, you don't know what the guidance is going to be on those earnings calls, it's going to be a tough trade. So be careful out there and watch the trends. All right, let's look at the markets and see what's going on from a technical standpoint. All right, folks, you know, I look at this, right? This is a bullish trend. It's an old way of looking at things, but you know what? It does tell me a bit of a story here. And this is on the really the original bullish percent on the New York Stock Exchange, NYSE BPA. You know, you're looking at an RSI that just hit that 50 and rolling over. So I think there's room. Now, this is a much bigger index than, say, the Nasdaq 100 or the S&P 500, but it's still kind of showing you or painting the same picture. It never quite got to overbought, right? So you start to see, I'll move to the NDX here. This is the Nasdaq 100. Now look, this is at 58. We filmed this, I think last week it was around 70, 73 or so. That's a big push down. Now it's oversold here. maybe we get a short-term bounce. It happens from time to time, okay, and maybe gets overbought again. But at the same time, you can see it be overbought, pull back, and then go down a little bit lower. I think that 50%, 40 to 50% is really a reasonable pullback, even though the RSI is suggesting that it's already oversold. But look, it can go lower here, right? The RSI is not going to dictate what this big, bullish percent sort of indicator is doing, right? It's just an indicator on top of an indicator, but I'm watching it. So that's the Nasdaq 100, and here's the S&P, right? Pushing down to 62, going, I have an average on this one. It's not, that important, but let me go back here. I think I have the RSI here. You get the RSI and the average on this one. Again, around 62, the average right there is about 58, not completely oversold. Maybe around that 49, maybe again, 45 to 50% could be a really, nice entry point. And again, it can stay oversold for quite some time. Not in this scenario, or I'm not saying we're looking at a 22 or a 20 or, a pandemic pullback back here. What we saw in 2022, if I go all the way back to 2020, it was at almost 1%. Right? We're not going to see, hopefully, we're not going to see something like that. But this is it's telling the tale, right, a little bit at a time. And I think when you get into these levels, again, what date was that? Right, the beginning of January. Now, market went up, right, between this time, but it started to show signs of less bullish patterns. That's all. I'm pulling up this gold chart because a lot of people are talking about it, with the safe haven trade, and a lot of people are kind of running into this, or potentially Bitcoin. I don't chart Bitcoin. I don't really know much about that. Obviously, at some point, it's going to have enough history that I can start charting it, and a lot of people already do. I'm just not in that camp yet, but I'll get there. On gold, I have a target of around 2,200 or so. It hit, about 2,150. That feels like it's close enough for a big metal, worldwide metal like gold, but not quite there yet. It's just kind of meandering on the sideways trade here. Nothing really to speak of at all. Natural gas, nothing going on there. I do want to look at oil. All right. Now, oil's got a bid to it. And I think, we've been seeing these trades right in what we called the White House buy zone a long time ago. I've been putting this chart up now for quite some time. I'm sure you guys are kind of sick of seeing it. However, it is actually playing out just exactly the way the White House laid it out and said between 67 and 72, they're buyers. Maybe that's the bid that we keep seeing here. The buyer comes in, and maybe that's just sort of the area, the put in the market that people are kind of trading towards and continue to test. Now, I would say that depending upon the presidential outcome, we might see oil fall depending upon one candidate winning over another. But I think at some point, if we start to drill more and we start to release that energy complex that we have the capability of, obviously we could see lower gas prices, lower oil prices at some point. Okay. Sorry for the sports analogy for those that are not sports fans, but I am. And so I use them. So I've got the offense, right? These are the three main categories: technology sector versus the S&P. I've got the discretionary sector versus the S&P. These are ratio charts. And I've got communication sector versus the S&P. Now, all of them have been in a tidy uptrend. This discretionary one's been back and forth. Don't forget, there's a lot of Tesla in this particular name. So that's really kind of skewing it. I'm going to try. Maybe I can create a composite that doesn't include, discretionary. We'll call it discretionary X Tesla. If I can do that, I'll try to post it maybe on Twitter. So follow me on Twitter at Pete Carmasino, and I'll try to create that composite and see what that looks like. That might be really interesting. So when I look at offense here, it's kind of just stumbling a little bit. I don't know if they fumble the ball, but they're just not moving the ball at this point. But this is what I'm looking at on the offense. Now, we got to look at the defense too. And the defense is really healthcare, utilities, and staples. They've been really not in the game at all. However, just recently, you're seeing a bit of an uptick. Nothing really that I would think life-changing, not yet anyway. But healthcare really has been the one that's done the best recently. It's kind of bottomed and really stayed in a sideways trend and trying to get a little bit higher. You see these two averages getting closer together where these other ones are just not even starting to turn up yet. So defense doesn't look like it's ready to play yet. All right, I'm going to wrap this up pretty quickly, but I do have some names that I'm concerned about that are kind of changing in the downtrend. I'll look at the Qs. You can see that's obviously rolling over here below our middle bands. These are volatility bands. Can we get back to 412? Boy, that would be a really big pullback and maybe a great entry point. Look at semis. They're really obviously under pressure here. They've just had an incredible run, folks. I mean, can we see a pullback to 190, 180 or so, 185? Sure. Why not? It's only 10 points away from where it is right now, and maybe even to that long-term average. So just take a look at those. Now, some names in there like Micron, right? MU, down very fractionally today. They've got earnings that come out in March. They just reported back here. And I'm just seeing a change in trend. All right. I'm just calling it out. I don't know exactly what's going to happen with Micron, but when I see a change in trend like that, to me, it's something that you got to pay attention to. Another one is Synopsys, also down $10 today. Looks like it's changing trend as well. It tried to regain and it did. But even though we have this setting that says oversold buy on it, I'm not convinced because it's below the long-term trend and the technicals are kind of pointing a little to maybe a deeper pullback. So that's another one in software. And here's one, if you're following any of the electronic equipment stocks. Here's a name that just is having trouble getting above the new high, but again, breaking down on the relative strength, overbought right here. Even though I'm seeing a strong stock and a strong group, this particular name looks like it's kind of yelling out that it might be changing trend to the downside. And let me just see here. I think I have one more. This particular name, Ryder Systems. All right, so Ryder Systems, symbol R, right? Transportation, ground transportation. Again, here's a trend that actually turned weak. It is still kind of bullish on our power gauge, even though it says neutral plus. That really means that a lot of things are at least neutral or better, but the stock has broken below its long-term trend and now put in a lower recent low. Found support right around here. You can see that level of support. But again, this move on relative strength doesn't look good to me. All right, that was a quick one today, folks. Thanks for tuning in. I appreciate it. Again, follow me on Twitter at Pete Carmasino. I'm going to try to do that composite. Try to look at discretionary ex Tesla, just to kind of see what's going on there. I think it might be interesting to take a look at. So follow me there. I'll put that chart out. Hopefully it's there tomorrow. Thanks for tuning in. Please leave comments. Love to hear them. Love to read them. Appreciate it. We'll see you next time. Take care.